Toast. Alright. So I wanted to make a video explaining Elliott Wave Theory and how I trade it, invest it, draw it in the charts, everything. Complete masterclass. And it is past midnight. It is almost 12:30 a.m. Just got home from work. And I'm just going to go ahead and make this video so y'all know and can understand my charts and why I draw it. First, I'm going to do this in the weekly. The daily and the weekly time frame is literally the only time frame I will ever look at, unless you're trying to snipe an entry, but that's not going to be a part of this. Right now, this is just going to be the weekly, because that's the main idea you want to get when you're investing. So, when it comes to Elliott Wave, start with the very basics of the 1, 2, 3, 4, 5. There are 5 waves, 1, 2, 3, 4, and 5. This is called a motive wave. Now, I'll show you the fibs, but I'll point out some tips on each wave. Wave 3, right here, is usually the longest wave. Okay. Now, depending how deep wave 2 and 4 go, will show you how deep. Like how deep wave 2 goes will show you how deep wave 4 will go. So if wave 2 goes deep, then wave 4 will be short. Or if wave 2 is short, then wave 4 will be deep. I'll get more into that when I show you the fibs for right now. These are my Fibonacci levels. You need the regular Fibonacci, then you need the trend-based fib. Again, the only levels I'm looking at right here is the 50%, 38%, 62%. For the trend-based fib, the only levels I'm looking at is the 78% fib and the 100% fib. Actually, no, sorry, the 78% fib and the 160% fib right here. Now, wave 2 will normally go to the 50%. But for example, let's just say it goes down to the 62%. Okay? I'm just going to go ahead and mark that. Now, let's see where wave 3 will go. Wave 3 will go to the 160% fib. Wave 3, 106% fib is the standard level for wave 3. Okay, so wave 3 is a majority of the time, almost every time, 160% fib, or in that area. Okay, now, as I said before, wave 2 is on the 62% or 68, 62. Okay, since wave 2 is deep, because anything below 50% is deep, anything above is short. So since we went to 62%, that means wave 4 will be short. So that would be at the 38% fib, right? Okay, so now the standard level for wave 5 is 78% fib. Okay. So the standard level for wave 3 is the 160. Wave 5 is 78% fib. Okay. Now, any wave can be extended, right? Wave 3 is usually the biggest, and sometimes it can be extended. So that means it will have another 1, 2, 3, 4, 5 within this wave 3. And actually, I'm going to delete this, and then I'm going to go to coins just to show you what I mean, because this is a extended wave, right? We have our wave 1, 2, 3, 4, and then we're going to our wave 5. I entered a little early, but so what? I guess I might get screwed, may not. But as you can see, we have this 1, 2, 3, 4, 5. Okay, let's just see what this looks like on the fib. Okay, wave 3 went to the 106% fib, exactly like I said. Now let's see subwave 5. Let's see where that went. Might went higher, might went lower, who knows. It went to the 120% fib. So it's not perfect, but again, wave 3 was 106% fib, so you can see that works. And by the way, only wave 3 is the longest, and if it's not the longest, then only one wave can be the longest. So most of the time wave 3 is the longest, but oh, was it 3? Hold on. No. Yeah, sorry, I got that swapped up. Wave 3, it's been a while. It's just in my mind right now. It's in my mind, so when I chart stocks, it's just by instinct, basically. But wave 3 is usually the longest. And if it's not the longest, it's the second longest. It cannot be the shortest. Wave 3 cannot be the shortest wave. Remember that. That's very key when you draw your Elliott waves. Wave 3 cannot be the shortest wave, and majority of the time, it is the biggest wave. Doesn't have to be, but it just cannot be the shortest. And then, again, I kind of skipped the very basic, but I assume people know. Wave 2 cannot go below the start of wave 1, and also can't be up here. It has to be inside of wave 1. Same thing wave 4. Wave 4 can't be below past 2. Can't be above wave 3. It has to be inside of this range. And then wave 3 has to be above wave 1. And then wave 5, almost every single time, if not every single time, has to be above wave 3. So, and then now let's get into ABC. We'll just use coin, for example. Right. Oh, actually, no, yeah, I'll just use coin ABC right here. So as you can see, it's very clear we have this correction wave because we already finished wave 3. So now what's wave 3 is wave 4. And then each wave is a subwave. So of course, wave 1 has a subwave if you go to a smaller time frame. Wave 3 is just extended, so this is the subwave, I guess. And then wave 4 has a subwave. And then each subwave, for any down correction, let's call any correction the opposite trend. So in wave 4 is going down, so we have ABC. You just gotta think numbers are going up, letters are going down, or the opposite direction. So we have this A, B, C. Wave B goes usually to the 50%, to the 62%. You're expected right there, but we went up a little bit, but it doesn't really matter. It's more of like an estimate. You're not shorting and you're not going to long on this, so it has no effect. As long as it doesn't break this top part of wave 3, then you are set. Now you figure out where it's going to end by using the trend base fib. Drop it to your range high, to your range low, and then back to where you think wave B ended. Your target is the 100% fib to the 120 to the 160. Right, that's going to be your trend base fib target. Or, as we can do what I showed you earlier, wave 2 is deep, so wave 4 will be short. Now let's just mark this. You can kind of see how I do it. Oh, wrong thing. As you can see, wave 4 is a little deep also, but it's not as deep. We're mostly in the 50%. Okay. Majority of the time, like 80% of the time, that's like dead accurate. If wave 2 is deep, wave 4 will be short. But in this instance, this is coin, so it's following the stock market, and it's also following the crypto market. So it's like a mix of them. So it's weird. But right now, yes, we are in wave 4. We got our A, B, C, and also each subwave. So subwave for A is 1, 2, 3, 4, 5. Subwave for B is in our A, B, C. So that you can see that perfect subwave for wave B. A, B, and then C. Right? And then it goes to another 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. So we could go lower. Who knows? It depends on crypto. Actually, let me look at crypto real quick. We're still respecting the bullish zone. This weekly candle will end in 18.5 hours. So once that ends, we might get another body down here, probably wick, go back up, and then hopefully go up, but we'll see. Alright, so recap, we went over 1, 2, 3, 4, 5, we went over extended wave. Only one wave can be extended, by the way, and majority of the time it's wave 3, but only one can be extended. Okay, so we went over extended waves, the 1, 2, 3, 4, 5, waves 2, 4 correction, the Fibonacci, my fib tools. We went over the sub waves, ABC. Again, wave 2 also is A, B, C. You can see the clear subwave. That's why you don't even have to really mark Elliott wave once you get really good at it, because you can see we never broke this swing high. So you just went A, B, C, and we broke the swing low to make C. C has to go below wave A. But yeah, I should want to draw that out so you really get it. Okay, right? So you see my A, B, C. Wave C has to break wave A. It cannot be A, B, C like this. Impossible. I see everyone, all the gurus, Elliott Wave on Twitter, That's what they do. Not do it. I can tell you right now that it's wrong. Not do it. They're trading and they're using some fancy term that was in some book that was wrong. That's not correct. You has to be below wave A. Okay, that was the basics. Now I'll show you a really good tip that I use to confirm the uptrend or the downtrend. Right, when the trend is going to start. Like, just because you hit your target for wave 3 doesn't mean that's a necessary top, because your wave 3 target could be wrong. We could keep going higher. And so this confirmation will make sure that you know that trend is ending or starting. So it happens on any stock, any time frame, but you're looking at this for the weekly to the monthly, not daily. You can use the daily, but it's not as high confluence, right? It's not as accurate. The weekly is more accurate. And what this is called a fair value gap, right? I'm just going to do a quick brief what it is, because that's a totally different video. I uploaded a video on Twitter, actually. Go check it out. But again, 3 candles right here, and there's a gap in the middle, a space where the wicks do not touch. So the wicks do not touch right here. So that is a fair value gap or a imbalance. Now you're thinking, well, how does that help me? Is that so you use that as like a target or support or resistance? No. When a stock creates an imbalance and it holds it, then that means it's going to continue in that direction, because that is a really good idea that the buyers are in control, and that means we will be pushing up. So I'm going to just back test it real quick with y'all. Let's see, is it still working? Hopefully you can hear me. You should be able to. How long is this video so far? No clue. Probably 15 minutes if I had to guess so far. Alright. Okay, as you can see right here, coin. We reached $31. That is the all-time low. I think that's the all-time low. We made this bullish fair value gap, this bullish imbalance. We retested it all the way back here for wave 2. We dabbled into it. Let me just, I can literally do this, right? Bang. We bounced on it. This means that we're bullish to start a big uptrend. Look at that, right? So you could have bought, you know, this as soon as this is created, but that's more risky, and I don't do that. I wait for a retest, and as you can see, we didn't retest that until wave 2. Wave 2 retested that. Wave 2 literally gave you a perfect freaking entry. Now I just realized that. Let's just see this. If you held wave 2 to wave 3, alright? Now, of course, you can't predict wave 3. Was it going to be extended wave? You know, I most likely would have sold way earlier. But let's just see, right? Let's just say your wave 3 target was just something stupidly insane up here. Way past 106% fib. Probably way past the 200% fib. But let's just say you held, right? That's 400% just because you bought off a retest of an imbalance right here on the weekly time frame, right? You don't even need Elliott Wave for that. You can really just this strat alone. It's just the imbalances, right? This is too much sauce to be giving away for, well, not free, but free for the members that's already inside, and then whoever else joins. But that is basically the imbalance, and when you have that going up, that means, of course, you're going to confirm the uptrend. Now, it doesn't have to retest. It could just make it and just soar straight up. Kind of like right here it did, but that's more risky. You can enter off of that, but again, like I said, it's more risky. Most of the time it retests. It all depends really on a lot of stuff, but if it retests and it holds like it did here, that's an even better sign that it's going to move. But sometimes it can create it and then just dump straight below it, and then that's why you wait for a retest, because you would get stopped out because you didn't wait for the retest and it just got invalidated. But you can see this work countless times. Again, imbalance right here, bullish imbalance. We made a bearish imbalance, but you see, that's why it didn't retest. You could say, oh, we're going back to all-time low because we made a bearish imbalance. But no, because when we went go up to retest, we invalidated it. And now we made another bullish imbalance, followed by another bullish imbalance, followed by a volume imbalance, followed by another bullish imbalance, and another bullish imbalance. Like, this is super bullish, right? Now we went down, trended down. As you can see, we never got a bearish imbalance at the end. We got it like mid-trend, like right here. So that when you get that like mid-trend, that's not as a strong sign that's going to continue in that direction. It still can, but most of the time that means it will need to be made at the start. And we didn't make that at the start. We made it like halfway down, so that's not a good sign. And then usually B wave will go inside of it, but we went to this imbalance right here, as you can see. bearish imbalance, went up for wave B, dabbled into it, and went down. And this is why I was bearish on Amazon, Microsoft, and I think Google. But will we be bearish? I don't know. It's just nuts. I don't have a position in yet, so if I was gonna add a position, I would want to be bearish until so I can add. But we could, for all I know, we could keep going up. But yeah, and we'll just do this on different stock, right? SoFi right now, right? Perfect example. We made this bullish imbalance, right? 3 candles, wick. There's a gap right here. Now, this wick didn't go way down here, right? There's like this wick is up here. So, really, starting from right here, all the way up to this candle right here is the fair value gap. As you can see, it's perfectly respected. But this is also volume gap, a volume imbalance, and touching it. So, they're both support and stuff. So, I just moved it all the way up to the next candle body. And that entire thing is accurate. And so now you see, we created that imbalance, went up, went down, retested, held, and now, as I said before many times, posted it on the Discord and Twitter, once we got that retest, this thing's gonna soar and break, and that's exactly what we did last week. We broke, and next week we'll probably retest and absolutely soar. And I can't wait because I have 65 shares in the portfolio right now. I should have bought more, but you know, it's what it is. I might buy more this upcoming week, but we'll see. Now let me get you a bearish example, right? Okay, example right here. Wave 1. Bearish imbalance formed immediately. We went up, respected it, went down. Okay. Now if I was in any longs, if I would enter longs up here, right, off of this bullish imbalance, I would have sold as soon as this bearish imbalance was formed. Because I don't wait for a retest to sell in the bearish imbalance when I'm in a position and up big. Like if it hit my target, made a bearish imbalance, I'm selling. You only wait for a retest on when you're buying, but not when you sell. When you sell as soon as it's made. So this was made right here. I would have just sold. You could have held it out and just wrote it for wave 3, but I don't do that because look how long you would have been in this position and lost like all your gains. So I would have sold up here for sure. And then I would have, of course, rebought. Now, you could be looking at this, right? When a bullish imbalance, you could have longed, thinking wave 2 ended right there, which it very well could have. But as you can see, well, I guess there's not really a good B wave, but you could kind of consider this a B wave, but it's not perfect. It's valid, but not perfect. But this is what I would just call as bad luck, and you just get stopped out, and then you would have wait, and then you would have found out, oh, this is just a wedge, and then you're even more bullish on it when it's like down here, because wave 2 can't go below here, it doesn't validate it. And this is probably it's me rambling on and on and on. You're probably like, I don't care, I just want the basics and learn this cool tips. You're sitting here breaking down a SoFi chart with it, but I'm just showing you how I think about it, how I chart it, and how it's not, a magic spell that's going to make you a crap ton of money. Like, of course, it took me a very long time to master. It's going to take you a very long time to master. But it's really simple. Just the best way is not to overcomplicate it. You just got to zoom out, think in the bigger picture. Think of the Fibonacci as a estimate. And I'm not saying if we haven't hit the 106% fib for wave 3, yes, we don't have to, but I would still say wave 3 is not finished unless we make a bearish imbalance, of course. If we're semi near the 160, like the 120, and we make a bearish imbalance, that means the wave 3 could be over. And if you hit your 160% fib and no bearish imbalance wasn't formed, then I wouldn't even consider wave 3 over. It could be, but the odds, like I already showed you, is it will form a bearish imbalance. Okay. I'll teach you, I guess, leading diagonals, because SoFi, I'll stay on SoFi because it's a perfect example, or falling wedge, whatever. Wedges, diagonals, they only happen on wave 2, as like shown, wave 4, and wave 5. Okay, so wave 2 and 4 will be a falling wedge, or a wedge. Perfect example, SoFi, right? It's falling. This is a falling wedge. Wave 5 will be a rising wedge. It's got a leading diagonal. Now it's a perfect sign for a top of wave 5. I know a stock had that somewhere. Tesla had it on wave 3, or not wave 3, sorry, wave 5, I think it was right here. Yeah, it was on the daily. Here's a wedge too, but that's not the one I'm talking about. I'm talking about this one right here, okay? This. Leading diagonal. Top of wave 1, right? That is subwave 5, so it's subwave 5. This all applies. Like a leading diagonal, when I say wave 5, I don't mean just the main wave 5. It could happen on subwave 5 too. So this was subwave 5 leading diagonal. It means we're bearish. And then we got our A, B, and C all the way down. Or A, B, C, whatever. But yeah, so you get up on the daily for that one. But I mean, again, even Tesla is a perfect example, right? You zoom out 1, 2, 3. Everyone was freaking out saying Tesla was gonna like $50. Because I thought I could have too. I had a bullish and bearish scenario. I said the possibility, but I also said we could just bounce here and go up, and that's exactly what we did. And I entered off of that. By the way, I entered way lower, but I just kept averaging up. So like my average now like all the way up here, and then I sold some and averaged more, so my average was screwed. But my first entry, I think, was like around this area. I was up, I know this 14% was up 65% at one point, 70 something percent. So I was up pretty big on my Tesla position. I sold most for a realized profit, but I'm holding 10 coins right now. I'm going to buy more if we go down and retest down here for sure. But actually, I don't know if I can. I might. Actually, I think I'm maxed out for the Tesla. Maybe not. I'm not sure. I have to look for my portfolio strategy, but whatever. So yeah, that's leading diagonals, that's wedges. I mean, there's trend lines, of course, but I think y'all know what a trend line is. I guess another tip is trend line break. We made a false breakout. We bounced back, reclaimed. That's super bullish. Well, one, if we make a false breakout, that's extremely bearish, means we're going to dump. But if we don't dump and we reclaim it, that's even more bullish. So now that means we're probably going to soar into wave 3. And most people think Tesla is going to go lower. They're not going to enter. They're not going to enter this trade. They're going to wait. So, oh no, we're going to go to 150 first, and then I'll enter. They're going to be set on the sidelines, and they're not going to come running to me because their ego's too big. But I mean, they should. Elliott Wave. I think that's basically it. I mean, again, recap. I'm not going to do a recap of basically how to draw your waves, but off the tips. Wave 2 short. Wave 4 will be deep. Wave 2 steep. Wave 4 will be short. Wave 3, 106% fib. Wave 5, 76% fib. ABC down for the main correction after the main wave 5 is roughly around 50% of the trend to the 62% of the trend. Okay, let me just mark this just to show you. It's around 62%. So you can see how that works. Again, imbalances just confirms the trend is going to start or end. What else is there? I think that's basically it. I mean, just stick to the weekly, daily. Don't use the 30-minute. Don't use the 1 hour. Don't day trade with it. This is only for investing for the long term or swing trading. But really, like weekly swing trading, wouldn't consider that swing trading. I don't know what you would call that. But hopefully this makes sense. This might be it right here because I'm not really sure what else I can teach you. That's basically it. I mean, I ran over some examples. Yeah. I mean, I can get into key levels, but honestly, I don't use key levels anymore because I just use imbalances. That's the only thing I use. Imbalances, order blocks, and that's it. But I don't use order blocks. That doesn't confirm anything. That's just support or resistance. But that won't, and that's not the reason the stock went down or up. So, and, oh yeah, here's another example. Right. Oh yeah, wedges can happen on a wave C too. Wave C. So this is wave C or Y. WXY, same thing, ABC. So wave Y or C, we got that wedge for dominoes before creating a 1, 2, 3, 4, 5, which is the same thing E and VX is in right now, right? We got this wedge, A, B, C, D, E, and then we got the 1, 2. As I said in Discord many times, this looks super bullish. No one listened, but you know, I'm up 30% right now. It was up 20-something% a day. Now we're up 11.5% in this day. We're entering my bearish imbalance right here, which it could reject and go down, but who knows? Most likely we will reject because everyone's going to FOMO in as they're being up so much, and then they're going to get stopped out, and then we're going to moon. More yapping. But yeah, I think that's basically it. I'll make more videos, but that's the basics of Elliott Wave. Now, who knows how long this is going to take to upload on YouTube, but we will see. But yeah, I'm going to end it here. I really can't think of anything else, so see ya.